Chips have cracked. Does this mean we're in trouble? Let's talk about it on the weekly update. Okay, friends, let's talk chips finally crack. Here's what you need to know. First up, the market is stumbling a bit on some former leaders hitting an air pocket. And of course, what I'm talking about is chips, and more broadly, the data center build out and a little bit of Korea. Market froth, all kinds of stuff is going to be wrapped up in this one. This is such an interesting video to do because it was about 4 weeks ago on this very channel. I did a video entitled Chip Mania, sort of talking about how great things were in the chip complex and the Korean complex and memory and all these sorts of things. And it's amazing how quickly we can go from the best of days to the worst of days. So let's talk about it, where it's coming from, and let's see if we need to panic at the developments that are happening. So first up, let's take a look at the market the same way we've always been looking at it. This is the S&P 500 in the green and red candles. Yellow is the 50-day, purple is the 200-day moving average. And what do you notice? Well, we are still in an uptrend. It was a fantastic uptrend, sort of defied the odds. But since then, in about the last week and a half or so, we've been in a very vicious drawdown. I'm going to kind of tie back to something I said the last time that we looked at the market. I said, if there was one defect in this chart, about a week and a half ago when we looked at this thing, I mean, it looked amazing, like it was going to go to the sky. And one of the things that I said was, if there was one defect, it's that we were in such low volume, that the market was moving higher, but really nobody was trading. There wasn't a whole lot of volume here, and it looked like everyone was sort of hedged up and defensive, and then just kind of like taking a flyer at something frothy. That money, for the most part, went into space, went into nuclear, went into chips, went into all kinds of crazy speculations. And that is enough to keep the market going higher. Unfortunately, what we're seeing now in the last couple sessions is there is a toll to be paid. The piper must always be paid, and that's what's happening here. So this drawdown looks totally normal, healthy, fine to me. I think what we're going to do is we're going to have a test on the 50-day. That's at 719 on the SPY. We're currently at 725, so we're practically there. We probably hit it tomorrow, and then we'll see what happens. What I would expect, a bounce or at least a test around the 50-day, some digestion, and then the market decides where it wants to go from there, if it wants to go lower or not. There's also, some other tradey signals in here. Like there's some gaps in the S&P 500, and gaps, in general, always fill or always close. And especially if we've got gaps on low volume, maybe we do need to fill these gaps. Maybe we do need to go back to 660. Like that would be painful in a drawdown or in a points sort of frame, but it wouldn't be that painful in terms of time. I mean, we were just there in March. So, this has really been kind of like a miraculous rally, and now it's kind of, maybe starting the beginnings of falling apart in a miraculous way. But do we need to worry about this? Is this going to be something bigger? Is it just going to be, garden variety, 50-day test? Well, let's talk about where it's coming from. I think a lot of this froth has been coming from the Korean markets. The Korean market, I have the Kospi over here, has been one of the best performing indexes year to date. I think, at its peak, it was up 90, 100% for the year. We're only less than 6 months into the year, so it gives you some idea of, the crazy stuff that's been happening over here. Kospi peaked out maybe around 9,000. It's currently 7,730, so that's a 15% drawdown peak to trough. Obviously, the US hasn't had anything close to that, but that's pretty par for the course for Korea. Korea has very engaged retail traders. They're called the ants, and their market is very concentrated in Samsung, SK Hynix, memory producers. And so what happens is, if you combine a lot of retail traders with a lot of leverage and willingness to really gamble in stocks with only a couple names, basically carrying your entire national index, that's how you get an index that can go up 100% in a year. That's how you get, going from the best of days to the worst of days, having a 15% drawdown in less than a week. And this thing, might only be getting started here. We might start to see some real pain. And what's going to happen is, because of this sort of like gambling behavior happening over on the Korean side, as that leverage gets wiped out, as people get their positions get closed, it causes liquidation cascades that kind of reverberate around the world, and eventually it shows up and hits us in our markets. Is this good, bad, or indifferent? I'm not making a value judgment on any of it. It just is. This is the way the market works. This is the way market participants work. People like to press and leverage up when things are going their way. And then, when the winds of change blow, they oftentimes get liquidated or thrown out of the casino. So it just is what it is. We got to live with it. So one of the ways that I like to look at things and say, okay, do we need to panic here? Are we seeing something systemic or are we seeing something normal here? I like to look at a market heat map. Heat maps tell you, okay, who's going up, who's going down, how are we doing? And what I've done here is I've pulled just a 1-month heat map. So this captures basically the peak and the drawdown. And so we can see, kind of like, hey, what's happening in the market? Are we having like a liquidation cascade happening on the US side? Those are the things that you have to be careful of. And to my eyes, looking at this heat map, no, not at all. So how you read the heat map is the size of the squares is how big the companies are. Green is positive, and the deeper green, the more positive. Red is negative, and the deeper red, the more negative they are. And so if I were to look at this heat map and appraise it for you just kind of live as we're looking at it here, this looks like the data center trade is unwinding. And it's good that the data center trade is unwinding because the data center trade got a little bit too big for its britches. Tesla, Amazon, Google, Nvidia, Broadcom, Intel, QCOM, GE Vernova, all sorts of specialty industrials down here, Corning, utilities down here, all Caterpillar, all of this, that entire complex, all of these people that I just named, what do they all have in common? They're all connected to the data center. The data center trade has been great. The data center trade has been going up. Part of the reason why we have the returns that we have is because we've been big proponents of the data center trade, but it can't just be the only game in town. I would be much more worried if this entire heat map were red, but it is not. What is going up? Healthcare is going up. What is going up? We've even got semiconductor suppliers going up, communication services here, computer hardware, banks, capital markets, beverages, consumer defensive stuff's going up, medical devices, apparel, TJ Maxx, here's vacations, here's Marriott and Hilton, here's Ford and GM. They've been going up during this time. So you're actually okay. If you're not touching a data center, you're okay. So when I look at this heat map, what this is telling me is this is just the froth coming out of the data center trade. This is the froth coming out of the Korea trade. This is the froth coming out of the AI trade. And thank God for that. We needed that. I have been running into quite a few market geniuses in the recent period, almost at perfectly the peak. Basically what they had to say was that finance was solved and you just buy a bunch of data center stocks. So the good news is, we don't play those games. We keep our portfolios broadly diversified. So we're going to be okay. We're going to ride through this. But if you want to know why the market is behaving the way it is, it's because of the data center trade is unwinding here. And if your portfolio is getting particularly hurt right now, it means you probably went a little bit over your skis. You took on too much risk and leverage. And now, a lot of pain is coming from Korea, and that's what's hitting you. So what does it all mean? Well, 2026 is market darlings. Korea and memories having some jitters. This is completely normal. It's part of the game. The US market is pretty much just collateral damage here, but we actually look okay. I believe that we are headed for a test on the 50-day simple moving average, and then we can assess from there. We should be there tomorrow. So I'll be taking a look and seeing how we do. All of this is extremely healthy. I've been talking to a lot of market geniuses. 100% of the client stock conversations I have had this year has been about something related to data centers or space or nuclear, essentially speculations or chasing something that's already gone up 100, 200, 300, 500, 1,000%. So all of this is very healthy. We actually need the market to not just go up every day. So that way everyone keeps their gloves up and we're not just throwing haymakers, right? What we're trying to do is box. We want to go all 9 rounds. We don't want to try and get a knockout in the first or second round, because to get a knockout, you generally have to drop your hands, and that's when you get yourself knocked out. So that's what's going on in the market. Chips are cracking a little bit. 4 weeks after we did a video on Chip Mania, it looks okay right now. I'll see you next week for the news review. Take care. Okay, friends, that was the video. Hope you liked it. If you found it informative, good, entertaining, I'd love if you could scroll down here beneath the video and give me a like there. It helps us out with the algorithm. And then if you want to be notified first of anything new that we upload to the channel, if you come over here, click subscribe, You'll be the first to know as soon as we upload anything. Appreciate it. See you soon.